Hey everybody, Chuck Barone here, Wednesday, September the 14th, 2022. Another day in paradise, guys. Of kind of a weird market today with the reaction from yesterday's big drama. But before we start, like always, I just want to thank everybody for their support. You guys rock. You make the show what it is. You inspire us every day to try to be a little bit better. We really appreciate you guys. And the markets today, again, market a day that kind of was to be expected after all the drama yesterday. The market needed to kind of take a minute, get its breath, and figure out what in the hell's happening. So we see today the stock market, very choppy day, up, down, looked like it was going to have a pretty bad down day, rallying late to finish up very small. The Dow, NASDAQ, and the S&P all finishing higher today, but just barely. In the bond market basically flat today, digesting, again, yesterday was such a monumental day for the markets. Today is kind of a digestion day, so the market's basically flat with the 10-year sitting at 3.41%. The 2-year having a little bit of a pop up to 3.79%. So the gap now widening out. Remember, it was down to 14 basis points, and I was saying maybe the bond yield could actually re-invert to a normal bond yield. Now it looks like it's getting wider and wider again. We're up to 38 basis points separation. Then they say the wider that gap is, the worse the recession's going to be. So we'll see where that finishes up. The dollar today down small on the index, 109.67. Still the undisputed champ right now of currencies around the world. The dollar, the buying power overseas for the dollar is great. It just kind of sucks here at home. With the supermarket or everything basically going up now except gasoline. We'll talk about that a little later with the P.P.I. report that came out today. Dollar down small. Metals had a little bit of a rally, or metals had another down day. Metals down today. Gold at $16.97 per ounce, breaking that support at $1,700, which was disappointing. Silver hanging in there at $19.69 per ounce. The gold one's a little concerning to me. I'm going to have to get into that chart a little bit and look at that. Tomorrow we'll talk about gold a little bit. It looks to me like silver really wants to break out, though. In spite of the dollar and everything else, it's kind of hanging in there. I think that if silver gets the opportunity, you're going to see some upside to silver. Oil today up $88.97 per barrel for West Texas Intermediate. Oil's been gyrating all over the place. One day the demand is down, the next day the demand is up. One day the supply is down, the next day the supply is up. OPEC's cutting, the news has just been mixed, and the price has been gyrating like there's a lot of uncertainty in oil right now. Natural gas up big today, $9.12 for their million British thermal units. It's up over 10% just today. Natural gas is the high flyer in the commodities market. We've talked about it ad nauseum. Why? And we'll see. I think there's still room on the upside depending on how things go this winter. Natural gas looks like it's up. It's already over tripled from where it was, and it looks like there's still room to the upside. Bitcoin today, down day, breaking support at 20,000. I think that it's going to go now, test that 18.5 again. I was really disappointed to see this. I thought Bitcoin was building some support. It just looks like it's moving with the markets now. So much for that independent thing that the vibe was. It looks like as the market goes, so goes Bitcoin with it. Today's big economic news, most of you guys have probably already heard this. The producer price index, the P.P.I. comes out today, up 8.7% year over year. With the core rate up 7.3%, which was a big disappointment to the markets. I think that, the way I look at the CPI, the consumer price index, and the PPI, the producer price index, in my mind, the CPI is a trailer. Okay, so it's telling you what's happened over the past 30 days. In my mind, the PPI is an indicator of what's going to happen over the next 30 days, because if the cost of producing goods is going up, we already know about profit inflation with businesses selling these goods. You can assume then the prices at the store are going to continue to rise. So this PPI number, not good for the markets, not good for us consumers, because this number tells us that this inflation isn't going anywhere right now. I'm starting to believe that maybe this 100 basis point move next week by the Fed might not be a bad idea. If they really want to show the world they're serious about fighting this inflation, it would be a strong move. The last Fed Reserve chair to raise rates a point would be Paul Volcker in the last big inflation battle. So I don't think this would hurt, St. Jerome's credibility at all with the banking world and actually even consumers. That they're serious. Let's show it. Let's see it. Because this PPI number, not good. When I heard this number this morning, I figured the markets were going to have a pretty crummy day today. So I was surprised even eking out a small gain on news like that is pretty impressive to me. Other news you guys need to hear about today. I was reading today, this is really something, guys. It said that possibly by the end of this month, the United States national debt will reach $31 trillion. $31 trillion. Now that was really, I hate hearing news like that. It's sad to me. The greatest power on earth being saddled and just not even thinking about piling more and more and more debt on without even, it's suicide, slow motion suicide. We're watching it. It's just ridiculous. But here's what really was kind of interesting. That the article went on to say that this $31 trillion debt equals $92,000 per citizen here in the United States. So every citizen in the United States basically owing $92,000 for the benefit of the government. But here's a number that really got to me. It comes out, this 31 trillion equals 245,000 for every taxpayer. Wow. That was a shocking, stunning number to me. The kind of number that I think we need to get out there a little bit more, make people aware of this number, because where does this end? In bankruptcy, the United States actually defaults on its debt, or they have to garnish every single citizen's money to try to stay solvent. This is not good news for the U.S. or our economy or our citizenry or anything else. Here was another interesting thing I saw today. This actually was on the local news. They were comparing the cost of living this year to the cost of living a year ago. And they were saying that just to live the same house, same car, same food, same everything, nothing changing, just to do the same as you did last year now costs $460 per month more than it did just last year. So just to have the same everything, the same heat, same power, same amount of gasoline, same food, same everything, now costs $460, $5,000 a year, basically, or more than $5,000 per year per household, just to live the same. And I thought that was something that really could put this in. When you hear inflation was up 6% or food was up 7%, you hear these numbers, it kind of gives you an idea of what's happening. But when you hear it like this, that just to live the exact same way now costs you $5,000 a year more to have nothing extra, that really kind of puts it in a true perspective of what this inflation is doing to households in this country, because there's just not a lot of when you look at the savings rate and you look at the way people are living in this country, 61% of the population, the working population, living paycheck to paycheck. An increase of $460 per month is a backbreaker. This is why people are using their credit cards just to do the necessities, just to buy food and put gas in their tanks. I don't see how this ends well. especially with what we know is coming, because we know the Fed's number one target right now is to get unemployment higher, which is a just crazy scenario where, one of the Fed mandate is a stable dollar. That's their number one mandate. Their number two mandate is to encourage and do what they can to get full employment, which I don't know if they're responsible for it, but here we are with full employment. And now they're actually going to have to go against their own mandate and bring that unemployment number higher to cool this inflation off with the way wages are rising. It's a topsy-turvy world, guys, and it's like every day we're on as the world turns and as your acid in your stomach burns, just more insanity. More interesting stuff today. Larry Summers was out today. Now, this guy's been right for this cycle, at least. He was the first guy out when these stimuluses were coming out with COVID to say this was going to lead to big inflation. He's been pretty accurate over the past couple of years with this stuff. He was saying that the Fed should raise interest rates by 1 full basis point next week. He said that would show seriousness, build credibility for the Federal Reserve in this inflation fight, knock down inflation expectations, which are important in the fight. So Larry Summers says the Fed should raise by a point. I don't know if that influences anybody, but the chances of that happening were zero just a few short days ago, and now the market is pricing in a more than 40% chance that we could see a 1%, 100 basis point bump in interest rates next week. Another important thing, railroad. Everybody's been reading about this, I'm sure. The railroads are about to go on strike. This is called Murphy's Law, right? Whatever can go wrong will go wrong, with an emphasis on this part, at the worst possible time. When you've got an inflation, you've got supply chain issues, you've got all this stuff going on in your economy, a giant strike with the railroads where a lot of stuff gets shipped by rail, guys, let's face it, this is not going to be good. It's coming at a terrible time with inflation. I think it's going to make inflation numbers just go even higher, go crazy. Hopefully this is something that they can get settled soon, because the longer this goes on, the worse it's going to be for the economy and obviously for us, the working people in this country. For some good news for retirees, though, I was reading that Social Security this year, with the way inflation is working, will probably get its biggest increase for COLA in the history of these increases for COLA. So they're saying that you could get almost a 10% increase in your Social Security check, which would be, even though it's going to, kill the Social Security fund and kill our finances, it's going to be something good for these retirees living on these fixed incomes who are, if the cost of living is $460 per month additional to have the same, and you're living on a fixed income, well, that $460 is really probably hurting you every month. And to get a little bit of relief in this bump on your Social Security check is going to be a good thing for these retirees. Again, just not so great for the Treasury. And lastly, I was reading today that now they're worried corporations are about to we're going to start to see we've already talked on the show about personal bankruptcies and how that's going to be we're going to see a big wave of those in the near future. Now they're talking about a big worry is corporate bankruptcies, because corporations are looking at the triple whammy here, guys. Number one, they're all super leveraged. Number two, when they're rolling that leverage over, interest rates are a lot higher, adding to those expenses, which causes them to raise prices, which adds to disinflation. It's just a cycle of horror that keeps going on. But here's the worst part. With the economy slowing down now, depending on what kind of business you're in, I guess, but the economy is slowing down and they know what's coming with this recession, they got a big fear corporate bankruptcies are coming. So we're going to watch all of this stuff for you guys. We're going to report on it every day. Tomorrow is going to be Friday. Thank you that this week's going to finally be over. It was a tremendously tumultuous week in the markets. But if you've been listening to what we've been saying and doing the things we've advised, saving 10% of your money, investing conservatively, and we've talked about what that means a million Brazilian times on the show. If you've been avoiding debt, you've been doing the things we've been saying, this recession isn't hurting you as badly as it's hurting a lot of people right now. So keep on doing it. Keep on moving forward. Hunker down, guys. We know what we got to do. We know it's the right thing to do. Let's do it. This recession will not be a forever recession. Someday it's going to end, and we're going to come out the other side looking for bargains. And the good news is going to be they're going to be there for all of us. And that's it for today, guys. I really appreciate your support. You guys mean the world to us. Tomorrow's a nice day to wrap up the week. There'll be a little bit of data coming out, but we'll find something interesting to talk about and to move you guys forward. Until we talk again, guys, take care. Thanks.